Like we were discussing the other day about bull markets and where the name comes from, this time bear market, the name comes from something very similar, the behavior of the bear, which puts its prey down, attacks it. Similarly, equity markets, when they fall, when they correct or are in a bear phase, puts all its investors down. In fact, there are research reports to suggest that a portion of the brain which activates itself when you're facing death is the same portion which generates fear when there is a financial loss.
And that's why, Feroz, it becomes so important for people to actually remain rational when they're dealing with this kind of a loss. And here's why it shouldn't scare you, because whether it's a bull market or a bear market, they actually follow cycles just like an economic cycle, which has 4 phases, whether it's an expansion, a peak, contraction, or a trough. So what usually happens is that when there are fears of an economic slowdown, the prices of assets start to correct, and subsequently a bear market would set in.
Yes, bear markets are those periods when you're making lower than the long-term average return of a specific asset. If you take equity, for example, the long-term return for decades for Nifty, which represents the largest index of our country, is 14 to 15%. If you take 1st April 2008 till 31st March 2018, the returns have been in the range of 7 to 8% for Nifty. This clearly indicates that we have got lower than long-term returns for the last 10 years on the index, which is the largest index. So this could be termed as a bear market.
The other way to define it is if there's a 20% correction, which signifies that that asset has entered a bear market. But you needn't despair, because as they say, we can always think of it as a great big shopping festival where there's a huge discount and everything is available relatively cheap.
Sumira, there's yet another way to define bear markets. Unfortunately, when it comes to bear and bull cycles, we think of only equity, but all assets go through cycles of bear and bull runs. But when it comes to real estate, the third definition is more valid, which is called the time correction. For example, property prices, especially in metro residential area, have not increased for the last 5 years. Neither have they decreased. But will I still term this as a bear market? Yes, because 5 years of no price movement is 5 years lost in a high inflationary economy like India. So that will also be the third definition to a bear market, Sumira.
So the bottom line is, bull or bear, there's no need to either be overly exuberant or be in a state of panic. Growth, the primary objective of any and every investment. There are many parameters to measure it in mutual funds like every other asset class. One amongst them that we consider most often is the CAGR, or the compounded annual growth rate. And this measures the mean annual growth over various periods of time.